Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into Next Level Charting. Thank you very much for joining us. I appreciate it. If you're watching this video on YouTube, and you like it, of course, please give us a thumbs up and consider subscribing. All right, so today we've got basically a moment of truth for the MDY, the MidCap SPDR, and the RSP, the Equal Weight S&P 500 SPDR, to see if they can break out. We have steel and home construction going for wedge breakouts, and I've got a steel stock and a home builder to watch for a setup. And we've got some breadth indicators I'm continuing to watch for signs of a correction. So I'm working off of StockCharts ACP here, and I've got two indicators. I've got the momentum composite, which is an aggregator of 5 momentum indicators looking for overbought conditions and oversold conditions. Mainly, I'm just looking for oversold conditions when the big trend is up. So when you get to -3, -4, -5, that means 3, 4, or 5 indicators are oversold, and you might get a bounce. The second indicator is the trend composite, and you can see that it has been positive since July there, mid-July, and so that means the trend is up for the S&P 500 SPDR. So I'll put the little crosshair on so we can see those oversold signals. And we look here, we can see that we got oversold there in May, and then even with this dip on Monday, a little over a week ago, we didn't become oversold on any of those indicators, and then we moved to a new high. So there's really no signs of weakness in SPY as it continues to basically do this grind higher. And I've got 3 breadth indicators coming up specific to the S&P 500 that I'm watching very closely. So here is MDY, and you can see a different picture emerging on this chart. So instead of grinding to new highs, we basically have a grinding correction of some sort. There you can see that pullback. And we're at a moment of truth because we had a little bounce and then stalled. And what happens after this stall is key. If we can get a breakout there and a move above that upper line, a channel breakout, if you will, that would signal an end to the correction. And I think this is a correction within a bigger uptrend because if you look at the trend composite, it's bullish. And we had some oversold readings in May, in June, and in July. And you got short bounces, but no follow through. So we need to get that follow through, that elusive follow through to get this correction reversed and the uptrend resuming. So the big question is weakness in, will weakness in mid caps and small caps ultimately weigh on the S&P 500? So here's RSP, and this is the equal weight S&P 500, and it takes market cap out of the equation. So MDY is moving, working its way lower, and you look at the average stock in the S&P 500, it's been largely flat since May. So there's basically a flat consolidation working here, and we need to get a break out from this consolidation. So you can see we got a bounce like we did in MDY, and then basically a stall, and we're looking for follow through here and a breakout. So if we can get mid caps and equal weights to break out, that would be positive for small caps. I would expect them to follow, and that would be bullish. But if they fail here and they break support, like RSP, if it breaks support, that would signal that we're probably moving into corrective mode. So talking about possibly ending a correction, here's the steel ETF, SLX. And you can see that it hit a new high there in May, and it fell with what looks like a falling channel, falling wedge. Doesn't matter which one it is, they're both the same. This is a big move. It deserves a correction. If you put on your Fibonacci retracements, I would guess that's about a 1/3 retracement. Doesn't matter that much. You're just looking for a generalization. This is a correction. And look, we have that gap down and then the recovery, and we're breaking above that upper line. And that looks like we're signaling an end to the correction in the steel ETF. And then for a stock that I was watching within steel, here's Nucor. And it looks like it is ending its correction as well. You can draw a little wedge there. So you had this massive advance. And so you're overbought here and you work it off with a little correction. You surge again, you're overbought and you work it off with a correction. And now we're breaking out and it looks like Nucor is trying to lead steel higher with a continuation of the bigger uptrend. Another one I'm watching is home construction. This is ITB, and you can see that it fell fairly hard this period right here into June, had a little bounce and then fell again. And if we draw some lines, we can see a bit of a wedge taking shape here, and it looks like we're breaking out of that wedge. And this is basically all I do. I look for corrections within uptrends. So you can see we're basically flat and we break out. You had a nice correction here and a breakout. So you had this huge move from, you can count that from January, from the low 50s to the mid 70s. So it's almost a 50% advance. You're entitled to a correction. And so this is the correction and it looks like it's trying to end. And there's a low from 5 days ago. And if you move below that low, then that would call for a reevaluation of this breakout here. And then within home construction, I'm noticing that DR Horton is also getting a breakout here. Got a little cold feet today, but I'm not going to worry about intraday price action. I'm looking at the bigger patterns at work here. So basically the same thing as ITB, a surge, a pullback, a big surge, and now a correction. And it looks like that correction is ending. Now what we have here with DHI is we have a gap right there. So we can watch that level. And if we fill that gap and we close below that close there, then that would call for a reevaluation of this wedge breakout in DR Horton. So I want to review those three breadth indicators that I'm watching for signs of a correction because, until the S&P 500 corrects, we don't have a real correction. So these three indicators, the first one is based on the bullish percent index, which is the percentage of stocks with double top breakouts on the point and figure charts. And so a double top breakout is you have an X column, and when you exceed the high of that X column, you have a higher high and a double top breakout. So a P&F chart either has a double top breakout working or a double bottom breakdown. So here on the AAL chart, you can see the column of O's, the bounce, and then this column of O's breaks below the low of that column. So you have a double bottom breakdown. So they would cancel out each other. So what the bullish percent index does, it looks for the percentage of stocks with these double top breakouts because that's basically a higher high and that is bullish. So it ranges from 0 to 100. And I put my bullish threshold at 60%. You got to get above 60% to turn bullish and below 40% to turn bearish. Now, you're going to get some whipsaws still, but putting your bullish threshold just above 50% and your bearish threshold just below 50% is going to eliminate some of those whipsaws. So we got a whipsaw there in in May, but then turned bullish there in early June. And this indicator has been bullish since. But if it goes below 40%, then that would be a bearish indication and suggest a correction is upon us in the S&P 500. So the next indicator is high-low percent, and it's based on new highs and new lows. So here on this chart, there you can see new highs green and new lows red, big expansion of new lows in late February 2020 and into March. And so high-low percent is basically the number of new highs, the green bars, less the number of new lows, the red bars. And you take that difference and you divide it by the total number of issues, 500 in the S&P 500, and you get high-low percent. That's the percentage of net new highs. So it's positive as long as new highs outpace new lows. And so what I do is I take the high-low line from this. And this is a cumulative measure of each day's high-low percent. So the line rises when high-low percent is positive, and it falls when high-low percent is negative. So let's check out that high-low line chart. So there's the high-low line, and since before September, it has been rising. There you can see the black line as the high-low line. And because it's such a smooth line, you only need a 10-day EMA on it. And as long as you stay above that 10-day EMA, that high-low line is rising. You have more new highs and new lows, and that means you're not in a corrective environment. If you move below this 10-day EMA, that means you have new lows expanding or new highs drying up, and that could be the signal that we're moving into a corrective environment. And then the next indicator is the percentage of stocks on a silver cross, a bullish silver cross. And that is when the 20-day EMA, which is blue, is above the 50-day EMA, which is red. And in the indicator window, I've got the PPO 20-50-0. And that shows you the percentage difference between the 20-day EMA and the 50-day EMA. And so you can see that this PPO is positive because the 20-day EMA is above the 50-day EMA. And you can see this PPO is negative because the 20-day EMA is below the 50-day EMA. And so what the silver cross indicator does, it takes the percentage of stocks with bullish silver crosses working. And that makes it a breadth indicator to watch. So like the bullish percent index, and I need to move this down a little bit. There we go. I don't use the 50% line for signals. I use 60% for a bullish signal, a move above 60%, and a move below 40% for a bearish signal. Because again, 50% you're going to get whipsaws, and you're going to reduce whipsaws by expanding those thresholds a little bit. So it's been bullish since late May, early June. And as long as it remains above 40%, it's not bearish. And so if it moves below 40%. So now you've seen three indicators, and if two of the three turn bearish, then I would suggest that a correction is upon us in the S&P 500. And that is what to watch. So if you'd like to know more about trendinvestorpro.com, you can click on the link below in the description. Again, if you like this video, please give us a thumbs up and consider subscribing to StockCharts. Thanks again for tuning in. Have a great day, and I'll talk to you again next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.